It is time now to talk real estate. Ozzie Jurock joins us. Hello, Ozzie.
Hi.
We're going to talk again about mortgages because the real estate prices just seem to be going up, and we want to be able to make it affordable to keep buying property. So part of the solution is offering longer mortgage terms.
Longer mortgage terms and different products. We have so many different mortgages now. For the consumer, it's truly bewildering, and you really have to do your research before you sign on the dotted line.
Let's look at some different types then
Sure.
of mortgages.
First of all, we have now a stated income mortgage, which is made really for the person that's self-employed. That's what it's meant. So you state your income. It means you don't have to supply your T4 anymore. So that's the new product. Then you have a mortgage that's actually for the bankrupt person, a person who's recently discharged. It's a separate product for that. Now, all of these products have higher interest costs attached to them. Then you have an investor mortgage, the person that wants to become an investor. Once you have 3 or more properties that have a ratio of 1.1, meaning for every 800 in debt, you have 880 in income, then the 4th, 5th, 6th, and 7th property you no longer have to qualify. So it's sort of an investor portfolio mortgage. Then, of course, we have the interest-only mortgage, the mortgage you never pay off, ever, right? And then we have credit lines out there, and I mean, probably 18 different kinds of varieties of open mortgages. And the newest fads are the ones where they extend the term. We always had a 25-year term. Now we have a 30 and 35-year and a 50-year term contemplated.
Wow. All right. Well, let's look at some of the monthly payments that you'd make on some of these longer
And that is
terms.
really what people should look at. If it's a $100,000 mortgage at 5% interest, then the monthly payment over 25 years is $581.60. Over 30 years, it's $533, so you're only $48 less a month. Over 35, it's $501, and over 50 years, it's $450 a month.
Okay, but all of that is interest, right?
All of it is interested up front, and after 25 years, or after the total amount of interest, when you look at it, is kind of astounding. On $100,000 after 25 years, you pay $74,481.
Wow, almost double.
Almost double. But over 30 years, you pay $92,158. And over 35 years, you pay $110,597. That's all interest. You still have to pay back the $100,000.
Wow.
And in 50 years, you have $170,300 that you paid. Now, the average mortgage in the Lower Mainland is $300,000.
Wow.
So now you would have paid $510,900 more in interest over 50 years. And so just think about it. Now, the other thing, that's at 5%. If you go up just 2.5%, let's say we went to 7.5%, which is possible. Well, then add another, so you would have to pay $250,000 more in interest on just $100,000. So, and it's just incredible. Here,
the Bank of Canada raised rates yesterday. Do you think that interest rates we'll see 7.5% in the next year or two?
It's possible. It's probably not likely, but certainly we have raises 6 times in a row, and in Britain and in Australia we had 14 times increases, and that of course slowed the real estate increases to about 2 to 3% a year. They had a true blue soft landing. Of course, it becomes less affordable. That's why we have all these products. But if before you sign on the dotted line, I would really want to be sure that I understand it's all interest to save $48 a month. It may not be worth it.
Good advice, Ozzie. Thank you. And if you have any more questions for Ozzie or would like to purchase a copy of his newsletter, his website, www.jurock.com.